as well. Start recording. We'll give it another few seconds and we should be good to go. Yeah, I reckon. Got a few in the house. Hey, legend. How are you, Lunatic? Alrighty. I reckon we get cracking. I reckon we got enough. What is good, everyone? Welcome to another week of here with Aussie and GTG. Hey, thank you. Yeah, I know, right, George? We'll cover Moderna. Don't worry. Thank you as always. If you're live here with me, your time is always appreciated. Never take it for granted. So thank you for sharing your precious time with me kicking it here live. And if you're watching the recording, make sure to drop a comment down in the comment section on YouTube to let me know if you like what we talk about or not. Maybe you don't. Who knows? Let's get cracking. All right. As always, where do we start? We start with our market gauges. Our market gauges are the DXY, of course, the good old daddy dollar, and then Bitcoin dominance. So with the dollar particularly, we did talk for the last couple of weeks about the dollar coming into, let me just get rid of the magnet, coming into a bit of a selling pressure area, with the first selling pressure being here in this order block right here, and we saw a reaction just above. Nice push down. Now the real question is going to be, do we come back into a 76 AA6 area, or do we come lower first and grab this in liquidity, or do we just blast off straight for this outer liquidity up here, all these equal highs? This area is definitely of high importance here. We are on the daily here, but if you just zoom out on the 3 days, you can see big buy to sell move, and the same candle is also visible on the weekly buy to sell move. So this $100, which of course is a psychological number, very important. $100 20 to $100.50, very important. There's a bunch of liquidity sitting up here, but the question remains: do we go straight for it in these coming weeks, or do we just kind of roll down a little bit before and retrace deeper before effectively going higher for a bit? We'll have to play and play safe and watch what the market does. We do have some pretty big news today, I think it was, Forex Factory there. So today we have, what do we have? Why am I in 2024? 2026, January, June, July, May. Sorry, don't know what happened there. February, Jan. Okay, cool. So today we have GDP 11:30 p.m. Aussie time, and unemployment. And tomorrow we have PC, which is the price index. So couple of big news here, of course, for especially the first two, GDP and unemployment. We'll have to see what happens. I'm expecting some reaction from the market, of course. Whether it's already priced in, I think the Bitcoin price action and the assets price action could already be a bit of an indication as to what's to come. Market often likes to price in these scheduled events, because obviously these are schedules. But in terms of the dollar, let's just wait and see what happens here. If we do roll over, obviously the area of interest now is going to be this $99 here. We can now delete this, and this is the new structure. So as long as we close below this new structure and roll back down, we know that we're continuing lower. Or if we close higher, we know that the next target is effectively going to be this outer liquidity here. So nothing too crazy there. We'll put out two magnets. One goes there and the other one goes down here potentially. So we'll see where price goes. Okay, so that's the dollar. Bitcoin dominance instead has continued to move sideways, as it has for quite a few weeks now. So you can see this out movements, but it has had a bit of a spike, and importantly has grabbed this inner liquidity up here in the forms of equal highs. As you can see, this was the equal highs. Liquidity up here is spiked about, what is that, 3 days ago. So did grab that liquidity just here. And now, when those kind of spikes do happen, we will likely see some sort of continuation lower, potentially coming back into this order block right here. And the question will be, of course, what do we see from there? Do we see a reversal back up, or do we see a continuation of this chop? Okay, so we're not here to predict the market, but we can kind of have an understanding of where potentially assets may go, knowing that Bitcoin dominance is at a local high, meaning that the likely or higher percentage, high probability move is going to be towards the downside. And of course, we know if Bitcoin dominance tends to move lower, other alts tend to go a little bit higher. So something to keep in mind there for Bitcoin dominance, but nothing crazy. There's no huge moves. There's no clear break of structure. It's just basically chop sideways, which is not exciting by a stretch. Okay, so that is basically the two market gauges that we use. We are currently in a Bitcoin long. This Bitcoin long was pretty straightforward in terms of why we took it. So quick breakdown the reasoning for the trade, so you can understand. Of course, we were doing lower lows, so we were in a bearish price action. We then started chop, so moving sideways for a while, such time until we obviously broke structure and we started creating a higher high as opposed to the lower highs before. When these kind of liquidity trend lines get formed, we know that they more often than not, obviously, they're there for a reason. They built for liquidity. And what we do, we just grab a fib high to low. We'll wait for our 76 area, which is our kill zone, and we'll wait for the last, which is the sell to buy move. So this candle right here was our entry, got tapped nicely. Obviously, we want to put our stop loss below the equal lows that were here. I did have a second entry here in the form of second order. So if I was stopped out here, I would have re-entered a little bit lower, but that was not needed at the time. So this is really important for Bitcoin, this level here. If it does fail, it's not looking too pretty for BTC, okay? So Bitcoin really needs to hold this level and potentially going up higher. If it does, if we do manage to break above previous high here at 97, close above, we'll likely see 100, low 100, so 102 to 110, I reckon, somewhere in that vicinity. We'll likely see a push up. I'm not saying we're going to go and do all-time highs by all means. This is likely an area of reversal, in my opinion, for Bitcoin. But a nice long potentially here for BTC. We do need to be wary before waiting for these areas to be tapped. We need to be wary of some potential selling pressure on the buy to sell move that just occurred here. So this is going to be a big selling pressure area right here. An area to keep an eye out on. So the 95 to 96, call it 97. That's going to be our selling pressure right there. Okay. So, but if you are into this Bitcoin long, of course, I did say I don't like the fact that we have a volatile market, we have a choppy market. Cover your entry. Make sure that you take in your precautions here. If the market does decide to reverse down, yeah, look, the structure itself is pretty yucky. But this is prime. Like this is a great setup if you look at it, right? Like if you look at this, we had everything we wanted to on a daily perspective. What we had is we had obviously let me just get rid of my magnet again. So we have consolidation, liquidity, grab of liquidity, break of structure or change of character, other liquidity build, grab of liquidity. So we have everything we wanted for a setup. Now the real test is going to be, do we start closing above and making higher highs, or do we just simply roll over here and continue to go lower? So at the moment, this is just a nice swing, nothing too fancy. The structure has been broken in 4 hours, so you can see that was obviously a higher high. We have continued to make higher lows. This is just an inducement for a low. So this was the previous low, of course. This is just an inducement. Market needed to come lower to grab liquidity and continue higher. So not to worry about what it's looking like now, but it's not the cleanest of structures either. Like if you look at this, what is this? This is just yucky, right? But in reality, all it is just coming in for the money. Okay, so that's this is what it is. You can see we had, if you look at candle shapes, we had 2 consecutive bullish candle. We had an engulfing bearish, which then got engulfed in 3 candles again. So there's obviously, this was a manipulation candle right here, the one bearish candle, and then we obviously had the continuation of the real intention of the market, which was to continue higher. So just looking at this, what is it, 4 or 5 candles consecutively here, it kind of tells me that the market wants higher at the moment, and this is just this was a manipulation candle just there, which is fine. It just needed to come below these lows. So that's BTC. I say just, yeah, like I said yesterday, cover entry. Just make sure, you know, at least, you know, tighten your stop loss. It's too early to trail your stop loss, but you can tighten it or cover your entry. So BTC going well, all good there. Ethereum, we snatched an absolute cracking idea here. Went to full TP. We had a 4-hour order block of interest here. This was an interesting 4-hour order block here that got tapped by this order block, and then we were just targeting this order block right here. So nice rejection at the 76. I wanted to see some continuation and some confirmation of bearish structure, which was obviously in the 1 hour. There's breaker structures and whatnot, and that's when we entered at the high there. So full TP there. I did have a potential 1 hour entry on ETH lower, but it didn't quite reach. This was the 1 hour interesting order block for me. So this 1 hour push down, last sell to buy move, came and grabbed it, previous liquidity, didn't quite hit. So BTC did hit the mark, and we took BTC instead of Ethereum. So I have since cancelled this this limit right here. Let's take a look at XRP. What's XRP doing? Well, XRP is at very good levels here on a daily. In the sense that low to high, we of course are trying or attempting to make higher highs. So this was obviously a change of character, and now we've retraced right into the AA6 of this move, right? So high to low, we are sitting at the AA6, and we had a big reaction. Generally speaking, one of the easiest trades you can take on higher time frame, which is really quite easy, is whenever you're sitting at the 76 or the AA6, you know, you just basically just enter there and exit at the 50%. This is a very, very easy way of trading. There's nothing too much. You have to wait for the breaker structure, of course. You have to wait for the liquidity tapping, of course. But this was a relatively easy trade to spot in hindsight. You just needed to wait for the 76, which came in the form of this week. If you do remember on our Aussie channel, I did say if you believe that you are long bias, this is an opportunity right here for XRP. This was the trade. It's on the channel if you want to go and have a look at it. This was an easy trade again. So if you did take it, get good, congrats. You would have pretty much reacted straight away, because this was the trade, I think, or this one of the two. It was either this entry or this entry. So you definitely would have at least hit a TP1 or hopefully even a TP2 depending. But yeah, I personally didn't take XRP because I wanted to finish my Ethereum short. And UNI, talking about some alts, I think UNI is the one that is the most of the, for me personally anyway, interesting the most, I guess. It has retraced at really good levels. It has previously attempted to obviously push higher, didn't quite make it, came right back, created liquidity, tap liquidity. You can see you went low below these equal lows, and now we are likely ready for one last push down, coming back into this perpetual wick, or we're ready for a move up. So I don't mind UNI as a spot play right now, you can see it's sitting at a pretty solid historical low. So this $4 to $5 area, $4.50 to $5 area, has really quite acted as obviously support for quite some time. You can see that. I don't trade support, but it is obviously an area of interest for investors. Whenever we go to those lows, you can see it doesn't quite stay long there. It kind of tends to bounce, one twice here, once, and it bounced up. Here it chopped a little bit and then it started moving. So really interested at this $4.50 to $5 area where we are right now for UNI. Too early to say for a leverage play, but for portfolio play, if you don't have any and you're interested in DEXs or DeFi, definitely a solid play here. Probably easy to X, if not potentially coming back in some of this, $15 order blocks right here. So I like Uni where it is right now for portfolio, which is something that I didn't want to really necessarily call out in terms of spot, because I do think we have lower for BTC anyway. But hey, not everything moves down necessarily. Most of the things do when BTC goes down, but not everything. Let's take a look at gold and let's take a look at some assets now. What we're going to do is, first of all, we need to understand about Japan. So JPY is at 30 fixing bond. I think it's this one. So we have, no, it's not this one. Yikes. Anyway, I'll just do it without chat. It's not important. What we need to know is that Japan has raised its interest, okay, at the highest percentage in 30 years. So what it means is that up until now, if you were to buy a loan or take a loan out in Japan, you would basically have zero interest, right? So you would not return anything for you. So zero interest, meaning you will not make any money. So you put in $100, your $100 will stay $100. Now they're raising the interest for the first time in 30 years. What that means, it means that new investors or simply Japanese investors are going to start putting money where? In Japan. So money stays in Japan now, as opposed to exiting, right? Exiting Japan. What does that mean? Well, Japan has is one of the largest owner for American, so US bonds. Okay. Guess what happens now that Japanese investors have the ability to sell such bonds, okay, for profit, and now they can finally take a loan in Japan because their rates are better, right? So what does that do? What does that mean? Ozzy, why is it important? Well, it is important because all this is going to put pressure on the dollar, okay? This is putting pressure on the dollar. This is putting pressure on the US dollar, meaning putting pressure on assets. Very important macroeconomic here that is taking place in Japan. And that's why we are seeing other assets such as obviously gold and whatnot booming. But this unnatural boom of gold, though this is not natural, right? You can call it a bubble. Gold is gonna go to $10,000 eventually. Like it's not if, it's when. Okay, so I can do the when. This is the degen when. It's not if, it's when. So the fact that we now have a massive run on gold is going to mean that people are going to start taking some profit, likely around the 5,000, which is very close to where we are now. We're currently sitting at 4,787. So something to be wary of and mindful of. Gold tend to lead, okay, the run, and historically BTC follows. Okay, so BTC follows gold. Lags by a bit though, so something to keep an eye on. We just had a massive run on gold. Do we see another boom here? What I say boom, I mean this move from 88 to 110. Sorry, guys, just give me one moment, just one sec. Sorry, I'm back. Do we see another run here for BTC going all the way back up to 110? That's very possible. It is possible. And that's why when you understand the macroeconomics and when you understand the full picture on assets, it is so important to put them together. We gold, we have now, I think, reached an area where we'll likely have to retrace a bit. So I don't condone. It's not that I don't condone. I don't like shorting gold just because of the, when you have such a bullish price action, unless you absolutely time the top, it's the odds are really quite against you. But if I was to, sorry, Bubby, sorry, I've got my son in the background, just running around like a madman. Um, I don't necessarily condone shorting gold, but if I was to take an informated guess here, I would probably think that we will likely see um, some sort of retracement coming back into this equal lows here and potentially in some of this for our order block. So I would rather wait personally. I would rather wait until such time that we do go lower on gold and then jig along again. That's historically how gold has treated me very nicely in terms of longs here. So something to look out for here. Silver is obviously going to follow gold. It has slightly outperformed in terms of percentage growth. So you can see here we had a setup. Sorry, just give me 1 second. Oh, Bobby, I'm on a call. Okay, I'm on a call. Bobby, just put it down. Put it down. Sorry. Babysitting here at home. Still school holidays. Gotta love it. Gotta love it. You can see we had a setup here on silver. If you did take it, of course, yeah, that life is great. Not when you have to run lives, though. It does tend to be a little bit tricky. You can see here on silver, we don't necessarily want to keep a swing open that long. So I personally took 90% profit and I fully disclosed. I closed it up here in these longs. So don't necessarily expect everyone to just keep positions open. It's not good for your what's it called, trading discipline. Okay, so we just need to be wary of where gold is now. If gold is going to reverse, guess what? Silver is also going to reverse. So I think this is obviously the local top for silver, and emphasis is on local because we do have still the 100 psychological level very close here, and we do also have the up here, the extension, so the 618 and the 414. I do think we will likely retrace lower though before we hit those extensions up there. So silver is obviously coming into this, actually has already filled this gap right here, and now we just have to see. We just have to see how. We just have to see. Byron, thank you. Sorry, I can't think with someone talking in the background. We just have to make sure that we follow silver when and if it retrace 50% 618 first level of 50% 618 first level of interest, 786 a6 second level of interest. Of course, where do we like to take trades from? 786 a6. It gives us a better risk to reward there. Okay, so gold and silver both likely going to push lower. What is oil going to do? Oil is also likely to come back into some of this liquidity. I like the fact that it's creating this kind of trend lines and obviously liquidity here for gold. Sorry, for oil. This is US oil, by the way, not UK oil or anything like that. It's US oil. WTI I use as a ticker. I do like the fact that we're creating this liquidity because it tells me that we will likely come back and take it. Okay, so do we reverse from here? Maybe, potentially. I like that, but I am really just interested into coming back into this 76 area down here before I look at longing for oil. And you can see we had a nice sell to buy move, waiting for us at that 76 at A6 area. So this is oil once again. So does JPY go up in value compared to other forex? Yes, that is correct. So if we do look at anything JPY, so you would have, you know, USD JPY, meaning this is USD against JPY, we will likely see some sort of reversal soon, right? So meaning JPY becomes stronger. Euro JPY, same thing. We will likely see a rollover soon. You can see it's already starting to top, to give us signing on topping. GBP JPY, same thing, creating a lower low. So we will likely see the yen becoming stronger, and obviously if we have a British pound or any ticker against JPY, we will then have a stronger yen, meaning that this chart goes down because the yen is stronger. Okay, so it does look relevant. Pyro, it does indeed. GBP JPY. I did have an AJ here set up. It did get invalidated. I'm okay in re-entering a little bit higher. If you look at some of these forex. Forex, it's a different game. I play the big swings. So if you look at, this is on a weekly, we are pretty much at the AA6. So this is going to be a giga swing when and if it hits. So if I wait a little bit longer, you know, we can possibly have something like this, and then I will target at least a 50%. But in terms of tickers and pips and whatnot, it's massive. So something to wait for, I guess. We will wait and see, and obviously we'll have to see how tight of a stop loss we can put. But AJ, unfortunately, getting validated. I think the idea is right. It's just a matter of when. So I was maybe just a touch too early. I played off fib levels there, and more often than not it pays out. But in this case, we just looks like we're just going a little bit higher. So yeah, I hope that answered the question, T-Bun. JPY will go higher, meaning that some of these tickers against JPY will go lower. Okay. Moderna. Let's talk about some stocks. We talked about Moderna weeks ago now. I think it was in, when is it? I've got this, I can't see. When did we enter it? We enter in November, 24th of November. So a couple of months ago now. Why? Why did we enter? Well, this is the chart of Moderna, low to high on a weekly. Okay, so obviously massive retracement here. This was COVID. Of course, we all know what Moderna did. It was the vaccine. So no, absolutely no surprise that he ran from $11 to $500. But now we have retraced down to $24, well below the AS6, and most importantly, on a weekly, so this is not a day, this is not an hour, this is a weekly, we have been consolidating, slowing down, and forming liquidity. Until such time in November when we finally snatched that liquidity with this last push. And if we turn on the volume as well, we do see some nice spikes in volume. So volume started going up despite price going down. We like that. And yes, that was a nice signal for us to just go, hey, this spike in volume right here is likely when we know, hey, we got to pay attention. There's going to be a reversal. So we called it out at $24, and we are now sitting at a pretty 2x. So that was the reasoning of calling out Moderna. Risk to reward. It's all about risk to reward when it comes to trading, not just stocks, not just forex, not just crypto, but everything. It's risk to reward. Worst it could have happened here is Moderna going down another 50% and going from 24 to 15, potentially even down to 11. But the upside is we go back into some of this level up here. And if you look at the chart, tell me, chat, does this look absolutely unreasonable to you? It doesn't to me. I think we can easily go back in some of this this gap right here. So entering at 24 and exiting at 111, it is a pretty good trade in my opinion. So obviously feel free to take some profit depending on your, give me a little top up. Yeah. You can take some profit. A strategy you can do. Obviously, you are at 2x now, so you can take some profit. That's if you enter when we called it at 24. You can take some out here at 2x and wait for potentially a little retracement that it comes down and top up and buy some more with some of those profits that you took out, or you can just simply just let it do its thing. So it's entirely up to you and your strategy as an investor. Unfortunately, I can't make that decision for you. That's something that you have to learn how to do, take profit. But yeah, they're both valid strategies for sure. Let's take a look at Coinbase. Coinbase is a stock that I will be calling very soon. Again, I am not willing to call in it just yet. We have entered a DCA zone for portfolio. Okay, 226. Yep, it's a valid portfolio entry if you don't have any of Coinbase stock. But with BTC potentially going lower, and Bitcoin dominance hasn't made its mind up yet. Obviously, the talk about Coinbase rejecting the proposal the other day has retraced support for Senate Banking Committee. So there is a little bit more downside, I think, for Coinbase, which is okay. I want to see this gap filled up a little bit more. So $200 is not unreasonable in my opinion. We are at 226, so if you do want to obviously initiate a position here, positions do matter, of course, but just as always, you can scale in as we go lower. If you want some Coinbase in your portfolio, and I don't have any, but if you do, depending on what your entry is, I would say, optimal entry will be sub 200 here. So anywhere between 200 and 180 will be the optimal entry here for Coinbase. But please do put it on your watch list, because this is something that is definitely at very interesting levels here. Okay. And similarly, RIVN, I just love when a chart does what we say it's going to do. So this is obviously a chart that we nicely took. We took our trade at $11, and would you look at that? It went to full TP, and we said it was going to reverse here at $22, and it reversed at 22, and then we say it's going to come back at 16, and now we're back at 16. It's like reading the future, freedom. Not really. You just have to understand where the order blocks are and where the liquidity is. So now we are obviously retracing and retesting this liquidity trend line up here. This is not a bad level for RIVN here to enter. Once again, if you have got none, we could also got lower though. Okay, so there is a chance that we'll see another $14 and even potentially $12 RIVN. So if you are happy to initiate position and scale down, be prepared to do that. But this is not a bad area, because I do think this stock is going to do well eventually. This is the weekly to give you a bit of an understanding of where we are on RIVN. So yeah, there's definitely upside. Even $40-50 is not unreasonable here. Not to mention, obviously, I don't think we're going to go necessarily into all-time highs, but coming back into some of these volumes here at $30, and even equal highs here at $41. These guys right here, something like that is doable in my opinion. We'll turn this up. So it's a clean 2x potentially from current, or not even, a bit more from current price action. So up to you how you want to play. But once again, similar to Coinbase, this is not a bad area if you've got none to initiate a position. Okay, so maybe you buy some today at $16.50, and then maybe you buy some at $14, and then maybe you buy some at $12. Every $2 it goes down, you buy some. That way you are DCAing your position, and when it does go up and reverse, you've got an average at a nice level. Spot, my friend. So with stocks in general, I rarely talk about options, just because it is a concept that it's a little bit more advanced. So I don't necessarily do longs or puts or calls. No, not 500 long. No, this is all spot. I will call out an option. So this was an option, for example, this RIVN option. We took profit here. So this was an option, but it was called out as such. Okay, so these are all spot. BKKT, so backed holdings after catching ginormous 6x here, because we did catch all of this move. We have now retraced back into an area. So this was the other week. We were hoping we would see a retracement into this fair value gap right here. We did push a little bit higher. Okay, so I said I'm not chasing. If you watched our last recording, I said I'm not chasing. Let's not chase. Let's just wait for a retracement. Let's just wait for market to do its things, and it may just do that. You can see it's starting to push out to I guess reject from here. The target is still $12. So if we can come back into the $12 here, we are currently at 16. This will be a nice entry for me to give BKKT another go. Okay, so once again, $12. Put your limits. You can put your limits on, or you can just simply put alerts on. Either or. Okay, and then the last we've got on the list for today is MSTX. I broke down on our last recording what it is. It's basically a 2x leverage position on our MicroStrategy holding. So MicroStrategy, of course, if you want to go and buy, you can. It is MSTR. That's a ticker. Okay, so this ticker right here, it's sitting at $167, which is not a bad level in itself, because you can see we have retraced all the way down. We are sitting at a fib cluster. I did say I bought some at 163 myself. We ran up to 190. My target is about 300 and something before I scale out. This is not a bad area for MSTR, but tell me in the chat, if I buy at 160 and I exit at 320, what are my X's? What did I just do with my money? Did I double? Did I triple? I enter at 160, I exit at 320. What did I do? How many X's did I do? 2x, correct. I did a 2x. Same asset, 2x leverage position on an ETF. So this Defiance daily target, it's a 2x long on MSTR. It's an ETF. I don't hold. Apologies. Those are my alarms. I get frogs. MSTR goes up 2x, no worries. What about MSTX, which is based on MSTR price action? It is at an historic low. It has been consolidating for the longest. You can see, well, not the longest, but for long enough. And like George has rightfully pointed out in the chat, we have price going down and volume creeping up. Okay, so doesn't take long for MSTX to just go up. And just mind you that a volume spike like this and a price action on MSTR, if I go from $4.28 to some of this price action, I'm not talking about all the way up here. I'm not asking to go up there. I'm just saying, what if we come back into some of this? So coming back here, right, some of this price action here, we'll do it on the weekly so you can see a little bit better. There's less noise. Well, I want to come back into this order block here, which is the last buy to sell. So this is $20. Okay, $20. If I buy at 4 and I sell at 20, how many X's did I do? How many X's did I do? If I buy at 4, 5. That's right. So I've got a 2x against a 5x. And yes, there is fees, but there's fees in everything, and fees are just part of trading. So I'm not, it's like taxes. If you're paying taxes, it's a good thing. That means you're making money. Okay, there's ways to reduce your taxes, of course, but paying taxes is not bad. It means you're making money. Okay, so some things are just a necessary thing to do. So I would rather, yeah, nothing's free. That's right. This is what I want to see. I want to multiply my X's if I can, based on the same asset, based on the same thesis. Okay, so is there risk involved? Of course there's risk involved. We could go lower. We could go back from, we're $4 here today. We could go back to $2, $3. But hey, my downside is way lower than my upside in this case. So That is why I am not necessarily against taking this risk. Am I saying put 100% of your portfolio in MSTX? Absolutely not. This is a very small capital allocation. Like I'm talking maybe 2 to 3% max of your stock portfolio. Max. I'm not against doing a 1% if you're new to portfolio. Okay, so if you've got a $1,000 portfolio, you put in, what is that, 1% of 1,000, right? So you don't put much in it. You don't have, if it goes 4 5x, you just make some money, you rinse and repeat, take profit, rinse and repeat. That's how it goes. Does BTC bear market affect this? Yes, it is the same guy as max long in BTC. Yes, and BTC market does affect, of course, micro strategy. But once again, there are chances of BTC going, like BTC in the long term, right? It's going to be fine. We know that. BTC is currently sitting here at $90, $90,000 or thereabouts, 89. It will go to 50, it will go to 60, it will go to 70, and that will reverse up. Okay, so that 30%, 40% drop still to come. That will push the price down of these stocks, and they will go up again. And guess what happens when something is as undervalued, not undervalued, but on at a chart perspective, has got much more upside than downside. I'm willing to take the risk. I do think BTC goes down into something similar to what I discussed last week, which is the mid 60s. It just needs to break this massive trend of liquidity, but we'll go up before we go down, in my opinion. So this, I'm talking weeks now. I'm not talking days. I'm talking weeks. We'll go up before we go down. Okay. I do want to see BTC coming back into this monthly. Okay. Where is that? Let me just delete that. I want to see BTC coming back into this monthly push. Last sell to buy candle right here, and that candle sits at 65 to 58. Okay, that's my target for BTC in the bear market. Once we go down here, I will be pretty much putting not everything I have, because that's not the right words and not the right investment strategy, but you bet I will be trying to find as many dollaroos that I have to put into BTC once we get back into the 60s or high 60s or 70s. So yeah, hope that answers the question. Ozzy, do you still recommend Webull? Yes. For stocks, I do. I actually really like Webull. Thanks for bringing that up to my attention. So with Webull, we discussed, we just needed to see, we just needed to see this kind of movement, which is, I wanted to see some strength before I call it out. Well, we already called it out, but before, we have confirmation that we'll go higher. And up until now, all we're seeing is just consolidation, which is not a bad thing. It's a good sign. Usually consolidation means we are creating liquidity, but I am not against either scaling in if you haven't already, or just buying more every time we go lower. $7 today, I'm definitely keen to buy some here. I bought some at what was that, 8? I think it was when we called it, I can't remember. We took out this liquidity level here. The volume is still a little bit low, but I do think they'll sort it out. The earnings are not until end of Feb, which I've got a feeling they'll be quite pretty for them, because they are really pushing a bunch of things. But yes, Webull is definitely on the cards still. That is pretty much it for what I had today. Bit of macro, bit of macroeconomics, and yeah, just one live trade that we will let run until we hit some reversal areas. Do you guys and girls have any questions for me today? While I sip on my coffee. Yes, wait. PYPL. Let's have a look. Yes, PayPal. I like PayPal very much. I like PayPal as part of our portfolio. It is a juicy. This is a juicy area for PayPal, man. Definitely. If you don't have any Well, the live trade, sorry, not live trade, Nimesh. I meant the active trade. I apologize. Wrong use of words. Active trade, which is BTC. No, no real live trades. Got it. Yeah. Going back to George's question, which is PayPal, definitely. If you don't have any PayPal, this is a great area to scale in, guys. On a weekly, you're sitting at 886. Um, the chances of it going lower are pretty slim, in my opinion. 55, we come back, we create equal lows of 50. I'm willing to stay in drawdown for a little bit if the upside means we can hit the 120, 150, come back into some of this liquidity. This is another chart that looks like this, to give you context. Okay, so definitely something that yes, you should put on your stock portfolio. PayPal is a go. PayPal is a go. Here we also had Cracker Barrel bouncing from the area. So we called it here at 42. We were a bit early. I did say that there was a possibility we were coming back into a yearly candle, I think it was. Yes, it was a yearly candle. And sure enough, we did. We come back into the yearly candle right here. And now we are starting to move again. Look at the volume here on Cracker Barrel into this very tiny candle, and this is a nice level for absorption. So this is where it's going to reverse. So personally, I haven't bought any anymore. I've been sitting pretty at the moment, not doing too much, but yeah, not against DCAing your level down. If you're at 43 in with me, come buy some at 32. And wait for this to proceed higher. My target still remains around 73. So 2x, 2 to 3x on this stock, with the final target at 120, which will be obviously a 3-4x. Adobe, let's have a look. I'm just gonna quickly. I'm gonna put that there, and we are going to look at Adobe, which I've got here somewhere. Tell you what I'll do. I'll do this instead, because otherwise I have to find them. ADB. There it is. Adobe. Adobe is similar to PayPal. We didn't call this one out yet. I said, that was a potential. There was a potential trade. I'm glad we didn't call it because we ended up going lower. But yes, Adobe is definitely similar to PayPal at a very, very good level here. I'll tell you what, I'm actually going to go into buy this week. Thank you for the yeah, weekly on the weekly. We are sitting. What George is saying right now on the chat is we are sitting here at this nice weekly order block, which is a nice level for Adobe to reverse right there. So I do like that. I do like this idea. This is a go. There you go. You want a live trade? George just gave you one. This is Adobe. Not spot. This is for portfolio. Something like this, exit around the 400. Yeah, top of this. Nah, that's already been mitigated. I'll do it at 50% of the whole move. Enter at 294, exit at 455, exit one. So solid. This is a great one. I'll give you another one that I was looking at. And I think we are there. Speaking of tech, if you guys and girls remember a while back, we discussed about when we were talking about chips and NVIDIA and whatnot. We were talking about ARM64, which is ARM, which is obviously the ARM64 chips. I said there was going to be two scenarios playing out. Scenario one, we would have reversed the 50% 618. Scenario two, our preferred scenario is at the 76 and 886. Well, guess what? We are now at the 786, 886. So we are now starting to see some nice reaction here on ARM holdings. And if we get another pushback into some of this liquidity down here and ideally even test back that 76. I would love for this stock to come back into this daily order block right here. 99, so sub 100. I don't know if it will. If it does, that would be prefer. But this is definitely a nice area for ARM 6 or ARM Holdings, the ARM 64 makers chips, to initiate a position. So yes, you've got another stock play right here. You can see volume is starting to obviously spike up nicely. And earnings are coming up in Feb. So this is another stock play that I'm happy to call now, but also initiate position. So obviously wait for some of this gap to be filled and have another limit set at $100 in between the 76 A6 area and right here into this order block. Okay. So glad you guys asked a couple of questions because we squeezed in another couple of plays, which was nice. And other than that, I hope everyone is going to have a fantastic weekend for our Aussie friends. We're going to have Australia Day, whether you celebrate it or not. Some people call it Invasion Day. Some people call it Liberation. Like, you know, it's like, oh, you get all political. I don't really do political, but it is a public holiday. So if you do celebrate, great, go and have a celebration. If you don't celebrate, enjoy the holiday. So enjoy the long weekend. All good. Thanks, team. I celebrate it. That's it. Oh, I'm gonna go and crack a beer. Fam, always good to catch up and yeah, see you guys all. And I don't know why I was zooming in, but yes, thank you, and catch you guys and girls next week. Bye.